Welcome back. Micro, small and medium-sized enterprises are increasingly embracing smart bookkeeping methods, mobile financial technology and organized stable banking practices in efforts to grow their businesses. Despite this, they still face challenges accessing credit and training on business acumen. Our reporter Allan Aoko spoke to Microsave Consulting financial services specialist Kariuki on what small businesses need to do to expand their pool of financiers, and this is how that conversation went.
Hello and welcome. My name is Allan Aoko. At a time that the country is grappling with credit access, especially being felt down to the micro, small and medium enterprises level, women are grappling with the very same challenge. Imagine small businesses at the grassroots just looking to get by at a time when economic turmoil seems to be hitting them the most. But today we want to talk about financing these small businesses, and we are joined with none other than Kariuki, who is a banking and financial services consultant at Microsave. Welcome to this show.
Thank you.
Thank you very much. I want to start with this question. Tell us about some of the projects that you're doing, especially when it comes to empowering women in small businesses in the country and the region.
So we've been blessed to work with a very unique set of partners, clients and funders, individuals who understand that financial inclusion can be a catalyst to greater economic prosperity for women. And so some of the projects we're working on allow us to design new products and services that meet the needs of women. They also allow us to have candid conversations with the financial ecosystem to understand what is driving the cost of credit. And sometimes these conversations are with government, sometimes they are with large financial institutions, with a vision of trying to lower the cost of credit. Because ultimately, if we can pull down the cost of credit, the wholesale credit that the lenders have access to, ultimately that will trickle down through the ecosystem if we make the right interventions with the financial service providers, so that then they can roll out those benefits and provide accessible, affordable and convenient credit to women.
Perhaps maybe you can tell us, why is it important to empower these women in business, the mama mboga? Why is it important that you empower them into this business space?
Correct. So it's extremely important because on the one hand, women in most countries, at least in Uganda, there are more than men. So I think it's 51% women and 49% men. In Kenya, it's nearly half, but I think that the skew is going towards more women. So when you think about it from a public policy standpoint, women are a sizable force in society, in our economic lives, in our families. They play very pivotal roles in society. So at the bare minimum, they should have access to equitable and accessible and affordable financial services to help them grow their businesses and keep their families afloat. Then when you think about their access, it's most programs that we're working on and also that funders are interested in are trying to drive affordable, convenient and accessible credit to women. There may be differences between men and women borrowers and their ability to repay, which intriguingly research has shown that women are better repayers of loans than men. So it's important to look at it holistically, very important for us to think about the differences and the reasons that have kept women lagging behind. And more so now when financial services are going digital. And that digital divide, again, has been shown in some markets to be working against women.
You've spoken about the government in making an enabling environment for this to take place. Perhaps maybe you can tell us about what else can the government do? Is it an issue of policy? Is it an issue of legislation? What can be done to make this work easier?
So I'll give two examples. I think if I think of the India example and where Microsave has done a lot of work, the priority sector lending norms in India unlocked a space for private sector players to lend at affordable rates to productive sectors. So think of agriculture, think of textiles. And I think that's what we really need here in some aspects. So there's a lot of space there. But I think as well, even from the ongoing government initiatives, and there are quite a number and they're all very well-meaning, I think if there is space to think about how to increase the access without causing market distortions. So when you have solutions that are broad netting, which is great because they'll pull in a lot of people, we need to have a clear graduation pathway out for those people who come in at, say, one of the government solutions. If they come in at a low interest rate and they can successfully repay that. To ensure sustainability, it would be great if they can graduate on to a different product or service by the private sector. So I think opening the data trails to allow graduation, and we're seeing actually, coincidentally, financial service providers realizing the same thing. Initially you talked about what about the women in chamas. So we're seeing financial service providers creating applications that are running in parallel to their core banking system, with the vision that they can build a data trail to understand Mama Mboga in chamas, for example. And ultimately, when Mama Mboga has grown to a level of a thriver and she can no longer, her business can no longer just tolerate or be sustained by the level of credit through her chama, she can then be onboarded onto the formal financial service platform, and that can happen quickly. And that will then accelerate the pace of financial growth and create a pipeline. So then for every person who graduates out, the theory being others will be waiting at the bottom to come in.
We're at a time of economic upheavals, and we are seeing, for example, the dollar now hitting record highs against the Kenyan shilling. I mean, how does a company, an organization like yourself, a development partner like yourself, manage to navigate these headwinds even as you try to empower women?
I mean, it is difficult on everyone, notwithstanding the shocks that MSMEs are facing are also the shocks that the private sector is facing. It's also the same shocks that the government is facing. So we are all caught in this circus of high inflation, very strong dollar, subdued global demand, and so all of us are trying to figure out the way forward. But I think for financial institutions and for women SMEs, there is an opportunity for both minds to come together and explore what can be best done to unlock the cost of financing. So we tend to think of it in three pillars. So on the access side, one of the challenges of the traditional types of loans that we may all be comfortable with is that if they're paper-based, it means there is a big machinery behind the scenes that has to process the paperwork. But thanks to technology now, you have advanced solutions that can minimize not only the time, but the effort and the cost required to do a single loan appraisal. So we're seeing a lot of digital financial services and providers coming into the market to digitize loan operations, right from origination to disbursement to collections. And that has a humongous effect not only on the customer experience, because nobody wants to sit around and wait for a loan that's going to come in 7 days if a mobile service provider can give them a loan in 24 hours. So that's helping to drive down the cost. But we know those investments take time, and there is more that needs to be done. In not so much in this market, in other markets where Microsave has worked, we've seen government interventions being very strong at lowering the cost of credit. So it's in private sector-led markets like most of Africa, the financial institutions respond mainly to market stimuli. So if the central bank increases the rates on their T-bills and T-bonds, all the other financial service providers respond in turn. But we're finding that in other markets where government has a stronger play, where government can mandate and say you will lend to certain sectors at a particular rate, that helps the ecosystem find a new equilibrium. But that also requires government support. So even in our local market here in Kenya, we are seeing some good and noble government initiatives that are trying to address the cost of capital by attacking those three levels of accessibility, convenience, and affordability. But to get them to scale requires a lot more because our market is very private sector dominant. But aside from the accessibility question, there's an issue of convenience. So today, women entrepreneurs can easily access their mobile phone, download an app, or even use their SIM toolkit and request for a loan, start repaying the loan, etc. So that convenience has come at a great cost. One, it's to deploy that technology in some instances can be expensive, but fortunately providers are trying to push the cost down and creating middleware solutions that make it possible for banks to deploy solutions but not necessarily have to invest in the full kit. But still, that convenience also means that, or could potentially, if not handled well, and I think this is sometimes the hesitation that we see with some financial institutions, the cost of convenience is that the financial institution can easily lose control.
What is the role of technology in trying to embed financial inclusion into the work of these women? Because we have seen on the ground some of them use very rudimentary methods of bookkeeping, for example, manually writing into what we call manual ledgers. How do we incorporate technology into this work?
Sure. In my past life, I used to develop a lot of products and services for financial institutions. One of the things we used to say back then is if you have a male and a female customer, a woman customer will take a longer time to understand what's going on. She'll need a bit more time to be fully settled with the technology. But once she gets it, it will spread like wildfire. And we've seen this time and time again in the proliferation of even very informal group-based financial services like chamas. If you look at chamas and how they've grown, they've been fairly heavy women-led, and very strong leadership opportunities have arisen for women within those chamas. So I think the first thing comes from being able to look at the segments, the men and the women, thinking about where are women strongest, where do they thrive, what environment actually suits them. So we found that when women are given a chance to access the technology, when they're given the chance to use the technology and at their pace. So also in my past when I was designing a lot of products and services, one of the things we found was, unlike men, who you will tell him here is a mobile financial service and they'll tinker around with it, they'll experiment and they'll try. Women generally tend to use and adopt new technology from word-of-mouth referrals and from their networks. So in the institution that I was at, we found instances where there were older women and there were younger women. And one question that kept troubling our minds is why would the younger women want to be in a small savings group with the older women? And the lessons that we learned time and time again were that there was some mutual reinforcing behavior that was actually keeping these women together. So the younger women were learning from the older women in terms of how to manage their families, how to manage their business, what to look out for. And then the older women were learning from the younger women on how to use technology. And because they were learning from sources that they trusted, and oftentimes these women were their peers or they were their children or relatives, it was easier for them to understand the technology, to start using the technology, to overcome any barriers that they may have had to using the technology because they didn't understand or they didn't feel comfortable or confident to go out and actually ask how to use the service. In fact, there have been studies that have been done by CGAP and others that have shown if you can convert a decent population of cash-in, cash-out agents to women, you then create a space for more digital financial access and usage for women, because when they go to the shop, when they go to the trader, when they're trying to use mobile money, if they see a woman on the other side, they're more comfortable and willing to trust the system.
From what you've seen on the ground, when we go to the ground and interview these women, they do tell us that one of the main issues they have is access to credit. Perhaps maybe you can enlighten us, given the competition that even Mamboga or yourselves you get when they do table banking, they come together by themselves and look at ways to save. I mean, how do you get into that niche knowing that you have this happening with the table banking?
Mambogas are probably one of the most resilient in this market. So as Microsave, we've been fortunate working with different financial service providers, and almost the same thing we hear from one provider is this thing we hear from the next one, is that because Mambogas have very short-term working capital needs on a day-to-day basis, they need to buy stock to upscale and expand their businesses. They're very quick at borrowing from any of the mobile service providers, repay by the end of the day so you don't incur any debt, so then they start the next day and continue the cycle. So financial service providers have opened up to this reality, and based on that repayment pattern, they are gradually ramping up their loans and access to credit. So just by them practicing that financial discipline already is gaining them traction. But I think where the conversation isn't fully told, and I think this is where, as financial service providers, as the ecosystem, we need to think about how do we create confidence. In my past life, we used to say that when it comes to credit, you will borrow from anyone. So initially, actually, Microsave's goal was to, when we got started, was to expand the suite of offerings that are available to low-income segments and break the linkage or the automatic association that the only thing that vulnerable communities need is credit, to expanding it to microsavings, so hence Microsave. So I think if we as an ecosystem can encourage women to save, and we've seen a number of government initiatives that have been trying to get mama mboga to save and even engage in government treasury instruments. Of course, some of those solutions still need to be further tweaked to understand the cash realities of mama mboga and other informal traders. There is more space for us to mobilize savings in a way that makes sense. So from our past work, again, as Microsave, we've learned that as much as mama mboga will borrow and repay on time, when she has excess in her wallet, she will pull that money out and either put it in a lock savings or she will go and give it to her chama. So then, whereas that is good, could that money be earning a little bit more interest? Could Mama Mboga be enticed to purchase a government security? Perhaps if it was not as pricey. Could Mama Mboga as part of a chama, as part of a large group of chama, could they mobilize resources and among all of them purchase the upcoming infrastructure bond? So I think we need to start having conversations that link the informal financial space more with the government and the policies and the financial solutions that are available. So in some other markets where Microsave has worked, for example, we learned that in Ghana, the chamas are registered. So that makes it a lot easier for chamas to mobilize their savings, but also to coordinate certain policy initiatives to support chamas, to support the women, to give them better access to finance and better solutions for savings and credit.
And finally, as we wind up the interview, what would be your final call and to whom?
One is to the government. And I'd start off by saying, thank you for the initiatives and for creating a stabilizing environment in which ecosystem actors can thrive. Of course, we realize government is juggling with multiple different things. And I think the ask of the government is not to lose sight of the big picture. And I think the big picture when the government began was to include as many people within the financial net. And that has different aspects to it. It has business formalization, business registration, it has interest rates, it has compliance costs, it has, trying to meet the needs of hustlers who are trying to graduate and get their way to thrivers. I think my next clarion call would be to financial service providers, not to give up. So I think every day we see very interesting things happening in the media. We are seeing some financial institutions increasing their rates. At the same time, we are seeing that having knock-on effects and causing high levels of debt distress. We are seeing high non-performing loans increasing, and then we're also seeing financial institutions having to have conversations back with their borrowers to encourage them to keep repaying, to maintain the cost of credit low. So I tell them not to give up in the fight. I think they are also trying to figure out how to collect and lend money affordably and productively. I think there's more to be done when it comes to thinking about the untapped needs of business. I think what we're seeing in this ecosystem and in markets now is the level of innovation is such that you and I can be sitting here and we can borrow large amounts of money without even having to leave our seats. So if the financial institutions give up that fight, give up the innovation, They will find that new market entrants will come, the likes of merchant lenders, etc., where where you're asking for collateral, this merchant lender is happy to give a loan just based on the value of the stock.
Well, there you have it. Thank you so much for watching. My name is Allan Aoko. We do hope you got some valuable insights into the world of small businesses, especially if you're a woman there who has a small business and you're looking for credit to buy stock and to make your business grow from the ground. We have been talking to Kim Kariuki, who is the banking and financial services consultant at Microsave Consulting. He has given us invaluable insight, and we do thank him for that. Thank you for watching. Goodbye for now.
Thank you, Allan Aoko. That's quite interesting, the study there on how the different sexes even embrace technology.